Hi everyone, and welcome to our Feliciano Live. This is our second Feliciano Live this semester. We had one last week. We were talking about the China-U.S. trade war. This week we have a little bit of a different discussion. Today we'll be speaking with Dr. Edmond Berisha, the assistant professor of the Department of Economics. And we'll be talking about, is there a recession possibly coming up in the future? Now, if any of you viewers have anything that you want to ask us, you could type a comment below, and we'll be more than happy to answer your questions. Just type a comment below, and we'll see if we can answer those for you. But to get started, for everyone just viewing, to give us some general knowledge, what is a recession?
Hey, thank you so much for this. So we have this measure of overall economic activities in U.S. and the other countries used to, which is called the gross domestic product, or the acronym is GDP. Mm-hmm. And what it does is just keeps track of how much do we produce new goods and services within U.S., let's say, within a specific period. And the highest frequency we report GDP is quarterly. And the definition, or the formal definition of the recession, is if this measure goes down in 2 consecutive quarters, then we are in a recession. And since last recession ended in June, I think it was June 2009, officially we were out of the latest recession in U.S., we have had positive economic growth. And we were not in a recession anytime since then. And that has been more than 10 years. So U.S. economy has not experienced a recession since then and has had a long-term economic growth since then that had never had it before. Mm-hmm. So this is the longest term positive growth we have had. And now people are being worried about, oh, is this going to last? Or should we expect any recession? And that's why now we are talking about the recession.
Sure.
So we are kind of thinking, oh, since it has been 10 years, we have not seen any recession, should we expect a recession? And my thinking is, I don't think so personally. I don't think we should expect a recession soon, because I've been looking around and Australia have not had a recession the last 27 years.
27 years.
27
wow.
years.
So that's almost triple the amount of time.
Triple the amount of time. So hopefully we see something similar in U.S. and
Absolutely.
Which would be good at least for young people, because that will lead to higher employment. So again, formally a recession means if I see economic growth dropping, being negative 2 consecutive quarters, that will be called a recession.
Thank you for that. And for everyone tuning in today, we're talking about, is the U.S. economy heading for a recession? We're on Instagram Live, our Feliciano Live, second one of the semester. We have these every single week. But if you guys want to contribute to our Feliciano Live, drop a comment below about anything about this topic. Is the U.S. economy headed for a recession? Any other questions you have on the topic, we'll try to answer them as many as possible. Just drop a comment below. So our next question, what are the signs that we can look at to see if a recession is actually coming?
So again, there are measures out there, but again, we are dealing about the future.
Right.
And the future is hard to predict. Some of the signs are paying attention to long-term rates, Treasury bonds long-term rates, let's say 10 years. And the story or the intuition there is, if I feel uncertain about the future, I want to put my money somewhere that are pretty safe. And what I tell my student is, we believe U.S. government is going to be here for forever.
Right.
So it's not going to be, so we consider the government like infinite living agent. So now, whenever we see long-term bonds rates dropping, that's an indicator that kind of investors are feeling uncertain about the future. And this is what we are observing right now. The long-term rates have dropped, and what it means is everybody's sort of moving their money into buying the Treasury bonds.
Right.
And whenever everybody buys Treasury bonds, the price goes up for those bonds and the rates drop. And that is one sign that, okay, is this indicating a recession?
Okay.
But to me, I would not read too much into that, because we need to think also what's going on outside the U.S. And there is uncertainty going in Europe as well. So pretty much what's going on is also foreign investors are buying U.S. Treasury bonds, and that's driving the rates to go down as well. The other sign that we can pay attention is what's going on with consumer spending. Mm-hmm. And consumer spending captures 70% of U.S. GDP. And now, if that's a pretty big measure. Now, if we see consumer spending dropping, that's kind of an indicator that the economy is going to slow down. But what we are seeing right now is consumer spending is pretty strong. We don't see any sign in that regards. Also, we should pay attention to what's going on with business investment as well, because from the business point of view, if I want to build a factory, I'm not going to look what's going on right now in the economy. I'm going to look at what do I expect to happen in the economy in the future, and business investments are not dropping. They're still, we see pretty solid numbers. So overall, the signs are not indicating any kind of recession sign as of right now, at least. So signs are good as of right now. So I wouldn't feel pessimistic, to be sincere. So
I'm glad to hear that. We actually do have two questions from our viewers. We'll start with the first one. Do you see any relationships between income inequality and previous recessions? So do you see any relationship between income inequality and previous recessions?
That's a good question because it relates to my research too. So historically, income inequality, kind of, if we look at the data, is at the highest point before a recession happens.
Right.
And it's a predictor, and research have shown that whenever income inequality in one country increases, it's followed with a recession. And I think it's, overall, I would say income inequality will add, because intuitively, this is what goes on. If we rely on consumption, that means if income inequality goes up, that most of the income, overall income, is going at the upper end. So people at the, let's say, bottom 50 or bottom 90, they are not experiencing growth in their income. So if income inequality goes up, that means people, they do not have sufficient income to buy goods and services, and that can harm the economy. Sure. So overall, yes, I believe income inequality will add negatively to economic growth. But as of right now, if I can relate to this, we are seeing real median income in U.S. going up in real terms. So after inflation, I think we see a 2% growth, annual growth, which is pretty good. So as of right now, I wouldn't really worry too much, because we are observing this real increase in wages, so which would help people across the income distribution.
Well, I'm glad so far you're having positive answers about this. I hope that you're right. I hope your predictions are going to...
Hopefully.
Yeah, hopefully. Obviously, like you said before, we're talking about the future, so nobody can ever really be sure about what's going to happen. We do have another question from the audience. And again, if you're watching right now, our Feliciano Live, you can drop a comment. We'll try to answer as many questions as possible. We're talking about, is the United States heading for a recession? So just if you have any questions, drop it down there. Our next question is, how do you think, this actually ties into what we talked about last week, but how do you think China's economic slowdown will impact the U.S. economy?
So now, this is a very interesting question. So if China slows down, I don't think it's going to affect U.S.
Okay.
To be sincere, because I think it's the other way around.
Okay.
Because China depends on us, because we import a lot from them. So if U.S. economy slows down, it's going to hurt China. Whereas if China slows down, yes, it can add to the uncertainty in the world, which can harm the stock market and then indirectly harm the U.S. economy. But the direct impact, I think, is going to be minor, because we consume from China. We do not sell that much to China, and the difference between exports and imports from China is negative for U.S., which is an indicator that we have a trade deficit with China as well.
So you don't think we depend on China as much as they depend on us?
That is correct.
Okay.
So that's why they are nice to us. We try to be nice to them, because we need each other. So
right, do a little codependent sometimes.
Yeah.
All right, very good. So, what do you think that policymakers can do to avoid a recession?
So what's going on right now is, again, we have fiscal policy, which has to do with government spending and taxes.
Right.
And we have monetary policy, which has to do changing the interest rate and trying to kind of affect the economy. In terms of fiscal policy side, what policymakers can do in government, they can sort of help the economy not slow down. And I think both sides in U.S., in terms of politics, they agree that U.S. needs investment in infrastructure. I think everybody agrees here we need to invest in roads, because across U.S. states, whenever we look at the roads, they are not at the highest quality possible.
I would say that most Americans would probably have that on their list of things that they want.
So I think right now, if we want to kind of minimize any potential for any recession, the right path for policymakers is invest in infrastructure, and that can further support the economic growth in U.S. I think we need renovation in airports, roads, etc. And the other thing is we have Fed, which is becoming very proactive and trying to stay kind of ahead of the curve in terms of changing the interest rates. And what we are seeing now, Federal Reserve is lowering rates, trying to support the economic growth and keep kind of this growth stay positively and support the overall economy.
So speaking of policymakers and government, in the past 24 hours, there's been a huge story that our President Donald Trump may be getting impeached. Do you think that the current impeachment inquiry will impact the U.S. economy at all? Do you think that it might lead to a recession? Do you think that it doesn't matter? What do you think?
Just now, this discussion depends how long it's going to last. But if it's just like a short-term thing going on, then I don't think it's going to fit into overall economic condition in U.S. It might affect the stock market, and we are seeing, like within these days, the stock market kind of dropping. But overall, if it's not going to last for months, let's say, I don't predict this thing will affect U.S. overall economy. Again, if we believe this impeachment will increase the uncertainty across investors, that can affect the economic growth. But personally, I think I will consider it most as a noise. Right. And once it passes, people are just going to keep going on, and I don't think personally will have any direct impact.
Okay, thank you for that. Just a reminder, if anybody is watching our Feliciano Live right now and you do have a question about the United States, are we heading into a recession, anything around that topic, drop a comment below and we'll be more than happy to answer those questions from you. And speaking of that, we actually have one right now. One of our viewers says, do you think the next housing recession will be in 2020, as some people predict?
Again, this is a long-term effects of last recession.
Right.
So we have experienced this recession in 2008 and 2009 that was due to housing, and now we are thinking, oh, is this a recession going to happen again from housing?
Right.
And personally, when I think about recession, recession usually come from sources that we don't really pay attention to, like hidden risks that we try to avoid and we don't really talk about. So if we talk about housing, if we talk about recession, I wouldn't worry about the recession. So since we are talking about recession, then that indicates that people are trying to be careful, policymakers are trying to kind of be ahead of the curve. So overall, I don't think it's going to come from housing, to be sincere. If there is a recession coming to U.S., I think it's going to be mainly driven from outside. So I don't know how long it's going to last, this thing between U.S. and China. If it lasts too long, then it can harm the economy. But again, we are going for election next year. So from the politician's point of view, you don't want to be going for the election and experience recession.
Sure.
Because recession is going to minimize your chances to be reelected. So that's why, personally, I don't think U.S. economy, even next year, will experience any official recession. And I don't think it's going to be driven from the housing sector.
Well, our viewers are great today. They keep dropping us questions. We're going to keep answering them. Again, if you have any questions, feel free to comment below. For our Feliciano Lives, we do these every single week. This week, we are talking about, is the U.S. economy headed towards a recession or not? If you have any questions about that, put a comment below. We'll be more than happy to answer it for you. Our next viewer question is, I'll read it word for word. A big topic today is the breakup of big tech industries such as Facebook. What could a decision such as this affect the economy? Would you believe it could create more innovation?
So what we see overall happening in U.S. is the sort of these big tech companies gaining a lot of market power. And from the economic side, if one company gets a lot of market power, can lead to kind of a monopoly. And monopolies are not good because once you become a monopoly, you can control the prices. Absolutely. And that can harm the consumer. So breaking up this, again, I'm not going to call Facebook monopoly, but like monopolistic power, I think it's good for the economy, personally, because you want to increase competition. And whenever you break monopolies, in this term, you will lead to higher competition, and competition will lead to kind of lower prices, and that will help the consumers better. Otherwise, if we let these big tech companies become bigger, they can control the price, they can control what's going to be produced, what not, and from the consumer side if I look from the consumer side, I think it's bad. So that's why I personally believe in having, yes, tech companies having innovation, but those tech companies should not have a lot of market power in the economy. So the breakup, I think it will help the economy instead of harming.
Thank you for that. So let's just assume that we are on the horizon of a recession. Let's just say that we are. Should the Federal Reserve continue to increase rates even though many predict that a recession is coming?
Again, one way to see, again, the target of the Fed is full employment and keeping inflation at the range of 2%. That's the target what Fed tries to achieve. Now, if we look at the overall prices in U.S., the overall inflation rate recently has been 1.8%, so close to the 2%. But that reason why it dropped to 1.8% is because oil prices are dropping in U.S. So now, we have this measure which is called CPI, excluding food and energy prices. So when I looked at it, inflation rate in U.S. is at above 2%. I think 2.3, 2.4, which means we are the target. And now Fed has to be careful because now we don't want to let it exceed, let's say, 3 or 4%, because again, inflation harms consumers, and probably not increase. To answer your question, not increase, but I would also be careful in decreasing the rate. So probably I will keep it steady at this point and see how the market responds, and then probably make a decision by paying attention what happens to the inflation and unemployment in U.S. and try to respond based on that.
All right, thank you for that. If you're just joining us in today, this is our Feliciano Live. We host these weekly, talking about different topics surrounding business. Today's topic is is the U.S. economy heading for a recession? And again, if you're just joining us, if you have any questions about the topic, surrounding the topic, feel free to drop a comment below. We answered a few of them already. We'll be happy to take a few more questions. We have some of our own too, so we're going to move on from here. So, how can investors better prepare for an upcoming recession?
Again, it's hard to prepare, but personally, I don't like this. I think has been going on since 2017, or are we in a recession? This thing about recession has been going for a while right now. So personally, I like to keep investors in a more optimistic side, because if investors feel pessimistic, that's going to harm the economy, whereas if they feel optimistic about the future, they will keep investing and help the economy grow. So if they want to take a safe side, one of the position would be invest in treasury bonds. So we are talking about small investors in this case. So whatever happens, then at least you are not losing your money if you buy treasury bonds. Other than that, it's hard to avoid the loss or the cost of the recession. Because again, if recession happens, unemployment is going to go up. It can harm people because nobody likes to become unemployed and creates this uncertainty. But overall, my opinion is the optimism should be going on, because optimism is good for consumers and good for the investors.
So you've mentioned multiple times that you don't think that a recession is coming, that your predictions is that we're doing fine right now and that we're not going into a recession. So where are these rumors coming from? Are people using this as a political tool to attack a certain party?
I think where these rumors are coming from is unemployment rate in U.S. is pretty low, 3.7%. Historically, I think we have seen something similar early 1970s. So it's pretty low now. If unemployment is pretty low, what should we expect next? So it's not going to get lower, it's going to start to increase.
Right.
And this is where people are like, oh, I don't think we are going to stay at this point for a long time, so probably we should expect something sort of bad happening. And the other thing is stock market has been doing, at least from 2008 until 2017, has been doing pretty good. And stock prices have been increased. And some economists were saying, look, I don't think this is very stable, because this over-optimism going on across investors can harm the economy, because once they realize, they will start selling off their stock and they can harm the economy.
Sure.
So this is kind of looking at the past and using the past kind of indicators and trying to see and make the prediction that probably we are heading a recession. And also the slowdown in Europe, recently the data have been showing that overall Eurozone has been slowing down. And the thing with the trade kind of disputes with China, so all of these measures have led kind of economists making the claims that probably we are heading for a slowdown. But again, as of right now, the way we see things, personally, I'm not pessimistic.
Okay, very good. And again, I know I've been saying it several times, but if you're just joining us today, this is our Feliciano Lives. We do these weekly, so definitely make sure to come back and view us each week. Today's topic is the U.S. heading towards a recession or not? We're talking about all things about that, topic surrounding that. If you have a question that pertains to this or is in the general area around this, drop a comment below. We'll be more than happy to answer a few of your questions. We've answered a few of them already. We'll be happy to answer some more. We have a few more questions until then, so make sure to drop those questions quick. All right, very cool. So, do you agree with the Fed cutting interest rates?
I think, again, Fed have well-prepared economists and they make a decision based on how they, and also they have better access to data and try to make the decision based on that. But I think Fed is feeling the pressure from politics because what's going on right now, we see the politics, the trade negotiation between U.S. and China, and whenever they do not negotiate or come to an agreement, we see stock market responding negatively. And the only option is pressuring the Fed to drop the rates, so kind of to help sort of not the economy not to go into slowdown, let's say. So personally, I don't agree. I would be careful in cutting the interest rate because to me is if you interest rate pretty much are low right now. Mm-hmm. So if you cut it more, I don't know how much it's going to help the economy because we have been in a low rate for a long time. So personally, I would be careful because if you cut it and you keep cutting the rates and the economy does not enter recession anytime soon, what if you enter recession in the future, let's say 2 years from now? The interest rates are already zero, let's say, by cutting them. So if we enter recession 2 years from now, you are running out of tools.
Sure.
So we had the tax cut. If we keep lowering the rate, pretty much we are going to lose both tools in terms of fighting the recession. So probably I would wait and not cut the rate and see if the data come out and there's something to be worried and then react rather than try to be too ahead, because if you are too ahead, then you can lose the tool that might be useful for the future.
So we should keep those tools just in case we need them in the future.
Yeah.
Because we don't need them at the moment.
Right now, we don't see any signs of any, let's say, we don't see negative growth, so why keep cutting the rates in?
Gotcha. So we have another question from a viewer. They seem to like us today. Thank you so much for all these questions. Again, I'll read it word for word. With the sugar rush given to the stock market by the current administration, do you believe that this growth is sustainable?
Again, since 2017, we have seen a big volatility in the stock market. So personally, I don't believe at least that's sugar rise being called. I don't think we have seen it since the last 2 years because there have been ups and downs. And I think pretty much we are at the point we were 2 years ago. So probably a little bit higher. But again, we did not see a big increase in stock market the last 2 years because we had a negative growth last year. Then we see this positive growth this year. But if we take the sum of the negative and positive growth, we are pretty much in a very small growth the last 2 years. But again, low rates will feed into the stock market. I believe into that one. And that's why we need to be careful. Even the Fed has to be careful by lowering the rates, or they kind of artificially inflating the stock market.
All right, thank you so much. Last question, just to wrap everything all together. In your opinion, I know you may have mentioned it before, but the straight question, in your opinion, is the U.S. economy heading for a recession?
So, as I said, right now, consumer spending has been strong during the summer, and we are heading towards the end of the year where we have Thanksgiving, Christmas, New Year's, and retail sales we should expect to increase, and consumer spending we expect to increase as well, which means that the economy at least is going to stay in a positive territory in terms of growth. And the other thing is, I don't think it's going to work for President Trump for U.S. recession to enter next year.
Right.
So my prediction are he's going to do whatever it takes to keep the economy growing even next year as well. So what happens after next year, it's hard to predict, but at least for the next year, I'm pretty positive that the economy is going to keep at least staying in the positive growth territory.
All right, sounds good. Well, we'd like to thank everyone for watching our Feliciano Live this week. I'd like to thank you, Dr. Edmond Berisha, Assistant Professor of the Department of Economics here at the Feliciano School of Business. And thank you so much for watching. We'll have another Feliciano Live next week, the same day, around the same time. Check our social medias, and we'll be posting about what time and what topic so you guys can be well-informed, and this way you can come and visit us next week. My name's Louis Biantilillo. Thank you for watching this week's Feliciano Live, and we'll see you next week.
Thank you.